Benjamin here, back here with another video. So guys, on today's session, we're going to be checking out the charts of interest for the week of the 13th of June 2022. So guys, I'm your host, Smo Lamini. So remember guys to like, share, subscribe, and also click that bell so that you know when we upload a new video. So remember, these videos are mainly for educational purposes, not trading or investment advice. So people are liable for their mistakes. Stocks for Hope will not be liable for any losses or profits made from this video. So it's important that you do not trade money you cannot afford to lose. So remember to like, share, comment, and subscribe to our channel, YouTube channel, Stocks for Hope, and also follow us on all our social media platforms at Stocks for Hope. So today we're going to look at Bitcoin, the US dollar index, the US 10-year yields, the German 10-year yields, and the Nasdaq, the S&P 500, the German 30 index, Euro dollar, GBP USD, and of course we're going to look at some JPY pairs, why the JPY pairs have been going up, and then also on the JSE side we're going to look at USDZAR, GRINDROD, the J200, NASPERS, and we're going to look at some retailers there as well. So let's get into it now. So inflation has been a problem since the beginning of the year, since the war started in Ukraine. Remember that Ukraine is one of the biggest wheat suppliers globally. So that alone accelerated food prices going up. Also, it also accelerated commodities prices also going up as well. So the inflation in the US hits a 40-year high. So that puts a pressure on the Federal Reserve, and also it puts pressure there on the presidency itself so that they can do some stimulus on some monetary policy right there. So inflation is a problem everywhere, even here down here in South Africa. We do have some inflation problem as well. Inflation is going to high numbers. As the year goes on, we're going to see even some more inflation as time goes on. So one other factor that has been going on in the market now, while the inflation story has been there, another story was actually booming in this case. The Japanese yen was also in trouble the past couple of days. Let me just say the past couple of weeks, because like we've been trying to short the Japanese yen, but now we've been trying to buy the Japanese yen, but it hasn't been possible. Like the Japanese yen has been falling, the Japanese yen has been weakening to a 20-year low. So it is quite extraordinary what is currently happening there. So there is another video that I did a couple of weeks ago showing that if the Japanese yen is weakening, the stocks again are also going to weaken. So if the Japanese yen is going up, stocks again also try to go up as well, in line with what is happening with the Japanese yen. So you can go to our YouTube channel there and check out that video that I'm talking about. This one, currency correlation. This is the one that explains why the Japanese yen is significant when it comes to stock markets as well. You can check out this video there, the currency correlation, on our YouTube channel. So moving forward, so the Japanese yen has been falling, as we have been saying. So a majority of us traders have been trying to short Japanese JPY pairs, like Euro JPY and like GBP Jpy. We've been trying to short those pairs, but like the Japanese yen has been weakening significantly, and it has fallen into a 20-year low. So regulators there in the in Japan are saying that they're going to intervene if the Japanese yen continues to fall significantly like that. So the inflation story is not just transactionary to only the stock market or the currencies only. It also plays a huge role when it comes to the crypto market as well. Because like if the US dollar is strong now, where will people get money to invest in crypto? Because there is going to be a high dollar amount that is needed there to invest money there in crypto. So I'm still pretty much bearish there on Bitcoin, as I've been bearish like the past couple of months. The structure here, it is still telling us that Bitcoin it is going to move to the 17,800 level. So yesterday we did break below the 30,000 level. So I'm recording this video on the 11th of June 2022. So it was the 10th of June 2022 where Bitcoin actually broke this level. So now it's trading at 28,781 US dollars. So 25,000 mark, it is going to be hit, which was the previous low that Bitcoin went. So after 25,000, 22,000 is going, and then the 17,800 level, it is going to be hitting. So if we look at the US dollar index, we are seeing that the US dollar has bounced off this level, which we spoke about on our previous video. So we are seeing that the dollar has this strong bullish candle that is right here. So the dollar is up 2% in the past week or so. So we might see actually the dollar pushing as high as 106 US dollars. So this dollar strength also pushed the US 10-year yield. It also pushed the US 10-year yield to go to extreme levels there. So if we look at the US 10-year, we did highlight that in our previous video that the US 10-year was going to bounce on this zone right here because of this FTR candle that is right here. So the 10-year also bounced. That's also put the strength there on the US dollar. And also we did see some moves there even on the German 10-year yields. So because the German, so the Eurozone central bank, what they did there, they said they signaled that they will actually increase interest rates in the next couple of months or so, or in the next couple of I think they said they are going to increase the interest rates in July, and on the meeting that they had this past week. I think it was on Wednesday. So so we might actually see some major moves as well there in Germany, because their yields are going to go higher in line with what actually is happening with the yields there in the US. So the previous chart that I opened was an inverse chart of this one. So you see that the US yields, the US 10-year yields were going higher. Even the German yields are also going higher in line with what's actually happening, that inflation is currently hitting everyone and everywhere. So if we are still there on the German 10-year yields, we might as well just rather check out the German DAX there. So if we look at the German DAX, we are seeing that it did try to move higher in the past couple of weeks. So this was the previous week. This was 3 weeks ago, and then this was the other week, and then you see that there was a huge rejection here on this 14,570 level. So we might actually see the yields there, the German yields there, actually trying to move as low as the 11,000 level. Why am I saying this? Because they might actually breach this wedge that is right here. So now it is a falling wedge, and if you can look here, there might be actually a head and shoulder pattern that is here, and then the German yields might actually go lower there. So if you look at the SPX, so the S&P 500, a strong dollar is actually bad for the stock market as a whole. So the S&P 500 is actually balancing at this 4,000 level, but the 4,000 level was breached on Friday's session, the 10th of June 2022. So the market actually breached that level. So if we're looking at the weekly charts, you might it is telling us that the 3,700 level is on the cards, because the structure, it is screaming that the market is in a corrective phase. So the 3,700 mark is coming, 3,480 as well as 3,230 there on the S&P 500. So the stock market, it is in trouble as we speak. So if you're looking at the tech heavy NASDAQ, we are seeing some similar patterns there in line with what is happening with the DAX, the German index, the S&P, and also here we might actually see the NASDAQ actually moving from, it is currently trading now. So now it's trading below the 12,030 level, which was the previous resistance. So now it is trading below that level. So you might actually see the NASDAQ pushing lower to 10,770. And if this level doesn't hold, it can actually push as low as the 9,500 level. So these are extreme levels that I'm talking about, guys. But by the states of which things are going, these things seem really possible to happen rather than being impossible for them to happen. So if you look at the oil markets, so if we're looking at the oil market, oil has been moving in an upward trajectory. But this previous week candle, it raises eyebrows because it is a doji candle. So the oil market moved higher and then it moved lower, but it closed at a level where it opened during the course of the week. So this doji candle can signal that the market, the doji candle signals indecision. The oil market is undecided whether it wants to continue going higher or it might get rejected here, maybe try to come back to the $110 level, because now it's trading at 120. So this doji candle raises some eyebrows that the market might maybe try to move lower to the 110 level. Maybe after that it might find some buyers there for oil market to go higher. So do not try to short oil, rather look for buying opportunities, because you cannot trade against this trend. So the oil market has decided that it's going higher. So if you look at gold, so traditionally when people are taking money out of the stock markets, they try to put it in safe assets like government bonds and gold. So gold, we have been talking about it for a couple of weeks now. So this pattern that is right here, it is still intact. So since the stock market has been going down, the Japanese yen is also going down. The euro is going down. Only the US dollar is positive in this case. So it puts gold in a positive trajectory that gold is a safe, it is a traditional safe haven asset. So gold, we might actually see gold trying to move higher. So this kind of pattern that is right here, this is the one that might actually happen to the oil market, because you see there's this candle, and then there's this doji candle. This was the indecision whether the gold market was going to go down or it was going to go higher. So in this case, it closed higher. So on the oil market, it is a similar story. Then the next week candle will tell us the direction whether oil will go lower to retrace or it will go upwards. So in this case of gold, you might see gold moving back to the 1,970 level, even as high as $2,100 per ounce there. So after we have checked out the gold market, we're going to let us look at the JPY pairs. So because we've been trying to short the JPY pairs, but it has been impossible to short the JPY pairs. Why it has been impossible to short the JPY pairs? Because of the JPY has been weakening significantly, and we've seen that earlier on, we've shown that earlier on that the JPY has fallen to a 20-year low. So if we look at EURUSD, this was a chart that we posted a couple of days ago. I was really disappointed by the performance of these charts. I don't wanna lie, because the structure itself, it did show us that the JPY pairs were going to be rejected somewhere at this level, and then they were going to go lower. But what happened? They continued to go higher and higher and higher. And the next chart of the JPY that I did was the GBP Jpy. A similar thing also happened as well. The structure was telling us that the market was going to go lower at this level right here, but it kept on going higher and higher. But now, if you are seeing that it is trading outside this this zone which we thought that the market will be rejected on, now it's trading outside. Now it's doing a first time back at this zone right here. So we might actually see that maybe the market would actually bounce from this zone and actually continue to go higher in this case. So even another pair of the JPY was the CHF JPY. So we did almost 3 JPY pairs, and almost all of them, those setups, they actually failed. So yeah, it's important to post winners, and also it's important to learn from the losses that we make on the market as well. So even the CHF JPY, we were confident that at this level right here, the market was going to be rejected, but somewhere and somehow the market moved higher. But now it is currently trading again at this zone that we thought the market will be rejected on. So the support right here, sorry, the resistance which was right here has flipped now, is now turned to a support level. So again here we might actually see that CHF JPY might bounce on this level and actually continue to go higher there as well. So that's not about this, just about it on the crypto, the S&P, the German DAX, the forex side, the gold side. So now let us look at the JSE side of things. So if you're looking at a USDZAR, we did say that the ZAR was going to bounce off the 15 Rand 30 level, of which it did exactly that, the 15 Rand 30 level. As much as there are stories about the president with his scandals at the farm, but the 15 rand 30 level USDZAR was going to bounce at this level. So the ZAR, in line with the dollar strength, with the inflation story that is happening around the world, so the rand is going to the 16 rand level, even as high as 16 rand 80, and the 17 rand 50 level is still on the card. So if we're looking at a GRINDROD, before we look at GRINDROD, let us look at our own index, the J200. So the J200, we are seeing that the structure here, it is looking very, very scary. Né? So this is a strong bearish candle, a rejection candle, that is right here. So a strong bearish candle, you might actually see the top 40 index actually moving as low as the 54,430 level. So do not try maybe to buy any of the large cap companies. Maybe just try to buy maybe the little companies like GRINDROD there. Because GRINDROD itself is much more of a conglomerate, if you see, because like they have a banking division, they have a logistic division, and also they have a rail network division. So GRINDROD, it is looking really attractive there. So there's this Adam and Eve pattern that is right here. So this is the Adam side, and then this is the Eve side. So we are actually seeing that GRINDROD might actually reach the 13 rand level in the near future. So that spike that was right here, GRINDROD might actually see we might actually see it reaching that level. So the story of NASPERS. So you see, NASPERS has been having a huge block when it comes to the JSE. NASPERS has been having a huge block when it comes to controlling where the JSE is going. But now, if you're looking at the top 40, where how it closed the previous week, it closed lower, but look how what happened to NASPERS. NASPERS actually spiked the opposite direction of the top 40. So I think NASPERS is losing its way there on NASPERS on the JSE top 40 per se. I'm not saying NASPERS is a buy, but I'm just telling you guys that the transition from NASPERS being one of the huge stocks that are controlling the index itself, but now what's happening is that the index is going lower, but NASPERS is spiking positiveness. So there is some changes that are actually happening then. So after NASPERS, let us look at some retailers. Why we are looking at retailers? Because inflation is a burden to retailers. Why inflation is a burden to retailers? Because if the average South African cannot afford some basic goods, retailers are not going to do very well. But someone else may argue that retailers can up their prices. When they up their prices, when people buy, retailers can make more money. But if the average citizen cannot afford some basic things like impopo, like wheat, like isinkwa, cornbread, like things like that, the average the retailers are not going to be in a very happy space right there. So that is just my opinion. So if you're looking at TFG the past week, it is down there about let me just see how many percentage. The past week it is down a minus 6%. If you're looking at Mr. Price, Mr. Price again there, it is down also a huge percentage there. Mr. Price about 8% there, it is down. So I'm just going to talk about these huge retailers now. The other one, which is True Words. So it's almost a similar story. Truworths naye it's down about 1%, and Woolies again is down there about 2% there again. So I can go on and on and on and on about these retailers, even ShopRite, Pick n Pay, Spar. They are even significant down there, a high margin of percentage. But if you are holding them, just brace and hold on to them. I don't think it is the right time to add any positions in the market at this point, because like you do not know the uncertainty of the market, how the market will actually perform in the next month or so, because a lot of things are actually happening, are actually happening in a short space of time. So if retailers go down, all prices go higher. So we are pretty much in trouble that we might actually be in a recession in the next coming months or so. So guys, that's pretty much my 2 cents when it comes to the state of the markets for this coming week. So remember to like, share, and subscribe to our channels. And remember that also these videos are mainly for educational purposes, not trading or investment advice. So guys, ngiyabonga, ngiyaleboga. I will definitely see you